Hey folks, it's a little different video than you normally see me do, but the reason for this is because I'm actually out of pocket. So I'm not at home, I'm out of town, and I'm visiting my son. But this Workhorse Q4 earnings report came out, and I listened to it, and I went through it, and I wanted to at least share some of my insights with you in regards to it. So it says Workhorse reported a net loss of $156.1 million for Q4 2021 with an expectation of deliveries of 250 units for 2022. So I was a little startled by that. So my question is this story, does it get better or does it actually get a little bit worse? And so you're wondering, right, is there daylight at the end of this tunnel? Anyway, welcome to MGA Investing. My name is D. I recently completed a four-part analysis, a whole series on Workhorse, right? So I talked about them from the perspective of using the DUM method. So it's the method of stock analysis that I use. The D stands for durable competitive advantage, and whether or not the company has one. That's critical because if a company doesn't have a durable competitive advantage, how does it protect itself in the market, right? And so that's really important. And then understanding, do I understand how they make money? And what's the likelihood of them making more money into the future? And then the other one is management. How effective is the management? And I have, several ways that I actually measure that. And if you go back and look at some of the other videos, particularly the ones on Workhorse, you'll see that played out, and I explain how I walk through that management piece. Another piece is the margin of safety. That is, when should I buy the stock, given that the other three criteria are on point? So if they're on point, when should I buy the stock? And that's the margin of safety. So that's the DUM method. So as you can tell, it's an acronym. I wanted to get back and I wanted to talk about some of these things as it relates to the company, as it relates specifically to the Q4 earnings, a bit of a dismal earnings report. There is a little bit of daylight, but we'll talk about that. So anyway, Richard Dock, the CEO of Workhorse, utilized this time to talk about really four key pieces. But the first area he talked about was hiring new senior management and the people that he added on. Now I have a whole video that talks about the management piece as part of that four-part comprehensive stock analysis that I did on Workhorse. So I'm not going to go into all of that, but I'll just kind of talk to a few of the points here. And one of them that was the addition of Bob Gannon, and I talked about Bob Gannon as a CFO in that video, so I'm not going to go into too much of that. Then there was the addition of Carrie Roraff as Chief Human Resource Officer, Brad Herzl as VP of Manufacturing Services, and then there's Ben Drake as VP of Government Affairs. Richard also indicated that the company is actually still looking for a CIO, so they don't have a Chief Information Officer just yet. Secondly, he talked about the restructuring of Workhorse's product plan, some of the enhancements in the way of engineering and technical expertise that they felt that they've added. And thirdly, there's the opening of the new technical center in Wixom, Michigan that they talked about to expand and enhance its design and engineering and testing capabilities. Currently, I actually, I went on their website and looked it up, and they only have 3 positions opened up there. And so can't really tell what's going on there, but maybe they're not up to full ramp up yet, or they had enough people. So anyway, I only saw 3 positions open at the Wixom plant. They didn't provide a number of hires that they brought on, but instead shared the cumulative experience of everyone that will cover areas of finance, EV, automotive, commercial truck, and related industries. And the company is now in the process of actually transferring, acquiring, and installing full vehicle and component testing equipment at the new facility, and the company has a target date of Q3 of 2022 for it to be fully operational. In April of this year, the company plans to consolidate and relocate its headquarters with its advanced technology team in Sharonville, Ohio, to eliminate redundancies that they have across some of these multiple plants that they already have. They want to improve efficiencies, communications between product and engineering, purchasing, manufacturing, engineering, quality, and production planning. All that makes sense because what they're trying to do is you're trying to lower these costs. And again, you're trying to get better at these communications between each of these components of the business so that the business functions better as well. They also have the Union City, Indiana complex that should be ready to begin production in Q3 of this year, which includes additional space that they're going to utilize to store batteries. And so they think they can control that, have a better controlled environment for battery storage in the new Union City, Indiana complex. So they're supposed to have an analyst event that's going to take place in Q4 of 2022, and then there they'll have it where people can come test drive some of these vehicles. They can test drive these electric vans and trucks. A fourth part of Workhorse's plan is a revised and executable strategic product portfolio roadmap for its future electric power delivery van and truck offerings across Class 3 through Class 6 segments. The company's committed to finish repairs to the existing C1000s and put those back on the road. However, it did decide to limit the number of units that it's going to make, and they're going to try to keep that limit to between 50 and 75, and it sounds like they want to stay closer to the 50 number than the 75, and I'll talk a little bit about that a little bit more here. And so they want to focus their efforts on the new EV chassis platforms to be developed in 2022 and 2024. Rich did provide some additional context around the challenges and costly repairs to get the C1000 back to road ready, which I'm not going to go through here completely because I'll save that for another time, but that's in some of my other videos, except to say that the company determined that the combination of C1000's limited payload capacity and unsustainable bill of materials costs make the C1000 economically unviable. This was a result of what I call Frankenstructure, right? This happens sometimes when you're building products where you build something based on your largest customer's specifications, but you end up with a product that's so costly that the customer you actually built it to spec for, well, they can't even afford it. They don't want to buy it. Workhorse found out kind of the hard way that it's imperative to build a truck that you can make money selling and your customer can actually buy, and you can actually source the parts consistently to build. As a result, the company decided it would only build, as I said, about 50 to 75, but they're going to stay closer to that 50 number, the C1000s. Obviously, this is a big setback for the company and a costly one at that. And so hopefully a lesson learned, but those decisions were made under the old chief executive officer, the old CEO. Richard did mention the company's actually sitting on firm purchase orders for C1000, so they expect to be able to fulfill those orders, and they'll also try to migrate some of those orders over to some of these new units that they're going to build out, and I'll talk about that here in just a moment. In regard to new vehicles, Workhorse will be focused on, one is the W56, which will serve the Class 5 and Class 6 delivery step van and truck market segments. It's targeted to hit the market Q3 of 2023. It will come in 3 wheelbase sizes and address an estimated total addressable market of approximately $1.7 billion per year. The W56 will be built upon existing and proven Workhorse chassis, e-powertrain systems designs, and will use readily available parts sourced from well-established commercial vehicle Tier 1 suppliers. Now, this is a tremendous technological bottleneck. And what I mean, let me explain that. So what happens, you can create this technological bottleneck when you're building a brand new product, right? You're engineering a brand new product. And what happens is you start to build something and it technologically works, it's technologically advanced, but when you find out, when you actually try to build it out to scale it, it's not scalable. And a couple of reasons that can be. One is you don't have a supply chain in place for these new technologies that you're implementing. And so because of that, what happens is you have all kinds of supply chain issues, so you can't scale the product. Now, you add on top of that the fact that we currently have these pandemic-infused supply chain issues already happening, and then you add on top of that the fact that what's going on in Russia and Ukraine, how that's gonna continue to cause more supply chain issues. Well, now you got a problem. It just wasn't scalable, and because of that, it's gonna make the product real expensive and not consistent in its ability to scale it. So you have to decide, well, we're gonna finish what we have and what we promised, but after that we're gonna scratch it, and we're gonna have to move to a different solution, which they did, and I'll talk about that. Those decisions made it nearly impossible to build out a product without a reliable supply chain with backup suppliers. So the second vehicle coming into production will be the W34. It's a new Class 4 chassis that builds on some of the key technologies that were first introduced on the E-Gen and the C1000 designs. The W34 will have a low floor platform, efficient lightweight systems, and the proven e-power powertrain systems that they already had. The total addressable market for this vehicle is estimated to be about $10.4 billion per year, and they anticipate production to begin in 2024. The third vehicle is a W750, a commercial van that's based on a chassis supplied by Green Power Motors out of Canada that was announced earlier this week to bridge the gap between what was created when they decided to limit the number of units that they were going to develop for the C1000. And so it's going to kind of fill that gap. It's considered a Class 4 vehicle that is Federal Motor Vehicle Safety Standard and Commercial Vehicle Safety Standard certified. So it meets all those certifications for FMVSS and CMVSS. It's going to have up to 150-mile electric range, 5,000-pound payload capacity, and a standard 60-kilowatt DC fast charging and optional 60-kilowatt wireless charging capabilities. Green Power announced that under the agreement, they're going to supply about 1,500 EV units to Workhorse over a 21-month period starting July 2022 at the Union City Complex. And so those vehicles should start being completed, or at least won't be completed until Q3 of 2022 and then throughout 2023. An update on HorseFly was provided in the earnings call. In my part one of my 4-part comprehensive Workhorse stock analysis, I mentioned my concerns regarding HorseFly. Like, I didn't really see where the market opportunity would lie with this, because I just couldn't see that, what they were showing with this, HorseFly coming out of the UPS truck. I just didn't see where the market was for that. But they did mention something I want to share with you here during the earnings call that it did pique my curiosity quite a bit. I also feel that there might be some possibilities beyond home deliveries where this makes sense. So they mentioned that they continue to make investments into the product, and they've increased the size of HorseFly software and engineering teams and increased the number of certified pilots. They also want approval, really important, they want approval from the federal government to pursue commercial FAA type certification for the HorseFly delivery drone in 2022 and 2023. They also reached final development phase for its vehicle launch drones with industry-leading payload range and safety delivery capabilities. So let me get to this part that really piqued my interest. Awarded multiple contracts and grants with the U.S. Department of Agriculture to provide sensor monitoring, data procurement, and analytics as part of a demonstration in the areas of agriculture, waterway, and land management, which I would assume would also include probably mapping technology, or using the technology to map territory. Other case uses Richard mentioned were national parks, large ranches, waterways, agriculture, as we mentioned, and areas where farmers usually have to take a 4x4 or an ATV or horse to go check on things. You can now do with a drone at 100 miles an hour with radar detection type systems that would allow the farmer to look at things from the ground. I thought to myself as I listened in on the call that these were each possible business case uses that may prove to have a real permanent addressable market opportunity. So I will certainly have to keep an eye on its development over time. Even Richard said that he believed the growth in this segment is phenomenal, and that he never actually seen his entire career, right, compounded average growth rate that looked like what's being projected by economic forecasts by some of these banks. The fact is, a lot of these UAVs were used primarily for military purposes. And so now people are trying to find, companies are trying to find different case uses and applications for it in the commercial space. You got to remember, you got to tamper your excitement about what Richard's saying about this, right? Because they're excited, but you also have to remember that these things are really in the beginning stages. No, we really don't know where these things are going. So they're a point only of potential opportunity. So still a lot of work to do with HorseFly. And certainly Workhorse has some advantage with having the only vehicle launch design drone, and the fact that it's only 25 pounds and will carry a 10-pound package load, and it could tether it and to set it down and to pick it up. So a major advantage there. They're also equipped with HorseFly with several cameras, also with LiDAR, and are currently taking it through some robust testing. Look, there's so much technology involved, including cameras and technology, and the ability to apply these technologies in a commercial space, that's a whole different ball game. So we'll have to see how that's possible and if it can be scaled. And as I mentioned earlier, when referring to the problems encountered with the C1000, you still have to have these supply chain setups in place, right? So without that, again, you can have a great idea, but it can't fly, essentially, right? Unless you have a supply chain to supply you with the necessary, not only the tools to build it, but also the parts, more importantly. And you have to be able to source those parts. And if you don't have an adequate supply chain in place, it makes it nearly impossible to do, at least at the scale that would make it profitable for the company. So let's say I'm cautiously interested in seeing if Workhorse has the right team in place to fully exploit the opportunity, or maybe they'll be forced to sell HorseFly to keep them afloat if they get strapped for cash. So we'll have to watch that. Fourthly, shoring up their financial position, which today looks pretty weak. Sales net of returns and allowances for Q4 2021 were negative $2 million compared to $700,000 in Q4 2020. The decrease in sales revenue was really because they didn't sell enough product, and the impact of the increase in vehicle returns and allowances in connection with the C1000 vehicles. So recalling all those vehicles was a cost associated with basically buying all those back. These factors worked to overinflate cost of sales, which increased to $100 million from $7 million over the same period last year. The company took $94 million in impairment-related non-cash charges related to adjusting carrying amounts of tooling and other assets related to the C1000. The net loss was, as I mentioned in the opening, was $156.1 million compared to net income of $280.5 million over the same period last year. So in essence, Q4 was a disaster. So loss from operation Q4 2021 were $120.4 million. Compare that to just $15 million over the same period last year. And the report just kept getting worse from there. One pocket of daylight was the $201.6 million in cash and cash equivalents and approximately $27.5 million in debt, which is just showed that they had enough cash to possibly get them through 2022. So I'm pretty sure they'll need to secure additional working capital to get to year end to continue funding these new vehicle build outs. The company will have some avenues to pursue additional working capital, I'm sure, as needed. It sounds like the agreement with Green Motors will allow for the opportunity of some flexibility as to when those 1,500 vehicles come in. Right, so it's over a 21-month period, and so they'll be able to ramp up or down just kind of based on what those sales orders might be like. The executive team seems to have an acceptable level of confidence in the supply chain to deliver the needed parts for the new build-outs of the new vehicles, and so we'll watch that very closely. And they'll also try to convert some of those C1000 sales that they've already sold. They'll try to convert those over to the W750 and W56 orders. Then there's the obvious need to attract, hire, train, and retain a sales team to hit the road and sell these trucks. These trucks won't be cheap, so they're not going to be an easy sell. They'll cost more than a comparable ICE vehicle, so compensation will have to be enough to attract the right sales professionals, which also won't be cheap. Currently, I didn't see any sales positions being listed on their career page, so maybe that's down the road. But it takes a while to train some folks, and if you're trying to get experienced people in this industry, you're going to have to pay quite a bit to get those, so we can look for those expenses to go up. All of this that I've discussed so far is part of Workhorse's focused 3-year business plan to stabilize the business and profitably grow and create shareholder value. So I would have to say overall it was a very calming earnings report. Yeah, there's a lot of bad news in the past. They presented a good picture for the future, but not enough to pull me off the bench for me to start throwing cash in and start buying shares, even at its current price. I'd like to see a little bit more proof in the pudding, so to speak, before I start doing that. So anyway, if you found value in this video, give it a thumbs up and please subscribe, and I'll catch you in the next video. Thanks for watching.